Hello, everybody, and welcome back to the channel. It's Evan Clementino here from COB, and today I wanted to run you through what the custom report looks like and how I add value to small construction companies. Yes, I sell bookkeeping, but really the main offer and the real value adding offer is these custom reports, because with solid bookkeeping, I can deliver custom business insights that help you make decisions and tackle the problems that you're facing or help you grow a business that you desire to see in the future. The data that I can provide you is only as good as the bookkeeping itself. I can't provide you strong insights if the data isn't there. So, step one in providing value via these custom reports is by providing or is by delivering quality bookkeeping in order to derive this data. Now, with different clients come different insights because every business is different. So this is kind of your run of the mill, your standard template. And from there, we add on specific insights or pages or metrics that you want to see for your business, or that I determine might help you understand your business better or reach your goals. So let's walk through the report together. We'll go page by page and I'll show you the value of each and every single metric. So the first page here is the profitability page. Now, this page explains what your profitability is. So this report that we're looking over here is the year-end report, but essentially every quarter can have a similar report, right? We can look at historical data from that month, that quarter, or the year. In this example, this report is dated February 28th. You see the three main numbers here are your February profitability, your quarterly profitability, and your year-to-date profitability. Seeing these numbers side by side can help you understand the trends in your profitability. And we dive even further by giving you that line graph at the bottom, showing you the cyclical nature of your cash flow month by month. So specifically, you as a business owner can read this and say, okay, obviously my most profit generating or revenue generating months are in the summer, like July and August. September's profitability was pretty tough because expenses were high and revenue seemed to dip a little bit. And then as the winter months come along, we can see that revenue starts to slowly stagnate as this business is a seasonal business and kind of goes into that hibernation throughout the winter months. So that's page one of the profitability. The second page is the position page. And what I mean by position is your cash position. It's the financial position of your business. The first half of it here, the top half, tells you how much cash in your bank account is yours to spend. I've repeated that question tons of times, but if you don't know that number, how do you make spending decisions that you know you can afford? This visual here shows you that out of a checking balance of $51,500, you only have $25,775 to spend. Well, where's the rest committed to? You can look at that list and you can see exactly what you owe in all aspects of your business, from the credit card balance to vacation payable that you're due to pay your employees, advances to and from yourself, so money that the business owes you or that you owe the business. There's source deductions, income tax installments, HST payments, WSIB payable, and there's even a safety buffer in there so that you don't spend too much and you're stuck with really, really slim cash flow at any point in time. On the bottom half of that page, we look at the runway. And the runway helps you answer the question, if sales stop today and I generate no more money, how long can my business survive with my current cash? So it builds off that first metric there. Your current cash, your free cash that you have available to spend is $25,700. And with that amount of money, your business can survive, or this business can survive 44 days before it runs out. As I've mentioned in a previous video linked here, I generate the runway value by taking your available cash, that $25,700, and dividing it by your monthly overhead. As we can see here in this business, we're looking at the annual trend and we're saying, okay, well, back in March, the runway was 30 days and it slowly starts to climb as the business goes on. That makes sense, right? Because you're profiting throughout the year and your cash reserves are just getting a little bit larger and larger with each job until the busy season dies down. You're getting into the winter and you can start to see it drops from 64 in November down to 51, 55, 44. Those are the quiet seasons. You're slowly using up your cash reserves to pay for your business expenses, and that runway is slowly decreasing until the busy season ramps back up. That bottom graph there just shows your available cash compared to your overhead trend. Those are basically the two values that determine what your runway is, so you can see why your runway may be growing or shrinking based on the numerator denominator of that metric. To clarify, I offer a monthly one-pager, and then I also deliver quarterly or year-end reports. Again, this is a very standard template. We can get custom to your business looking at specific metrics or adding specific pages, but those first 2 pages are a really good highlight of what your one-pager, your monthly information will look like. And then on the quarterly basis is what you'll see next year. We'll dive into a little bit more detail. So here we go. The third page of this report is the project overview. So this is where the job costing comes in, and we look at profitability of each and every job. If you're a company with high job volume, we'll look at the jobs that are most important to you, or we'll group them into kind of job types. But this shows you exactly in this case for this company, each and every job that they did, what the profitability of each job was based on the revenue and the expenses of those jobs. At the top here, you have the big numbers. You can see your average job profitability is 18%. The average job value is $54,600. These metrics are essential for you to know when you're pricing jobs. You can determine what jobs are the most and least worth your time. And then there on the bottom, you can see I ranked the jobs based on their profitability. This one here has a suggestion saying if profitability is ranging that much, you may need to tighten up your pricing a bit. And then on the right side there, it's breaking down your jobs into profitability groups, basically saying here that the most expensive jobs also deliver the highest profit margin, slightly suggesting that, hey, maybe you should look for more of those in the future. That might not be the case for your business, so it's important to understand the nature of your job profitability so that you, again, can choose which ones you want to focus on and which ones you want to leave behind. Continuing with job costing, this page here is a project spotlight, double clicking on one of those jobs and telling you all the metrics associated with that job. So in this page here, we chose Project Charlie. The income on that job, the sale price was $150,000, way above that average of $54,600. You can also see your expenses are way higher, $122,000, but your profit margin is just 1% higher than average. So all in all, you profited $28,000 on this job. Now, what is the nature of those expenses? Well, let's take a look here. 63% of that $150,000 is attributed to direct costs. That is the materials and the labor that went into providing this job. Then we allocate a portion of your overhead expenses to that job. Of all your overhead spent over the duration of the year, this is how much is attributable to Project Charlie. That takes out another 18% from the job, leaving you with 19% or $28,000 in profit at the end of it all. On the middle right, you can see the hours that were spent month by month on this project, peaking in September and coming in close second in October, for a total of 800 hours spent on Project Charlie. On the bottom graph, you can break down your costs into more specific granular information. So we're looking at overhead. $45,000 of overhead was applied to this job. Then we're looking at direct materials and direct labor, making up the bulk of the costs when you pair them together. Subcontractors, other direct costs, and equipment rentals are also contributed to that cost picture for this project. Job profitability is where this all began for me. I think it's absolutely essential that when you're pricing jobs, you need to have an idea of what you're going to bring out of it in terms of profit. And then that's step one. Step two is to actually run the numbers and determine if you actually accomplish that goal. Because by knowing those numbers, you'll be able to understand how to price the next one so that you can be better, so you can optimize your pricing, you can stay competitive on your pricing while also bringing home the bacon, okay? And now the last part of this report, something that I think we're all familiar with, but we'd like to know a little bit more about, is the overhead picture. So this is the last page of this report here, where I break down the nature of the overhead costs. So we like to think of overhead costs as like these fixed monthly expenses, and at the simplest form, they are. But sometimes they're variable too, right? You have the absolutely fixed ones like the truck payments or the price or rent or other fixed monthly subscriptions. But there's also the variability in some overhead costs too. Things like fuel or professional fees that aren't specifically attributable to one given job, but they are essential for you running the business. So this graph tells you that granular information related to those costs and help you forecast what your overhead's going to be in the future. You can see here on the top graph is looking at your main overhead categories and showing you the trends in that. The highest one and most obvious one, of course, being indirect labor. So that's your salary or the salary of administrative staff. Other than indirect labor, you can see that all the other ones are pretty steady. But when you look at them as a whole, they kind of tell that story of what's happened in your business over the last 12 months. Spikes in certain categories at certain times suggest you spent money in places because, oh, you needed a professional consulting service, or you needed to buy new tools, these kind of things. That's a monthly breakdown there on the bottom saying $8,000 was spent in indirect labor, and the runner-up category was only $1,600 spent on tools. The February overhead was $17,750, to give you an idea of how much money you were just burning every month just to keep the business running. When we see that number, when we think back to the runway calculation, it's pretty easy to see, right? If I had $25,000 of runway or of available cash and overhead is $17,000, well, I'm only going to last a month and a half, 45 days or so before I run out of cash. So understanding your runway can help you assess what the risk of your business, or the risk that your business is facing. How much money do you need to spend just to keep this machine running? And can you generate that cash in the future? Or how sensitive is that cash generation going to be? It can seem really technical, especially if you're not someone interested in looking at graphs. That's where the custom aspect of this comes along. I'm more than happy to deliver reports that are annotated, that are delivered in a video format or even in a conversational format. Whatever way is going to help you understand your business and understand where you're at and what you need to do to get where you need to go. Consider me your wingman, because beyond just the bookkeeping and the number crunching, this is really the value that I deliver, is interpreting that data for you in an accurate way and an actionable way. I hope seeing that these custom reports gives you an idea of the value that I can add beyond bookkeeping, because that's all I do. I go beyond the number crunching to deliver real insights and action items for my clients. Thanks for tuning in. Stay tuned for the next one here. I'll see you next time.